Hello everyone. You are listening to this audiobook on channel Voice of Purpose by NSS IT Bombay.
In the last part, we learned about checks, ATMs, and some basics of loan. This part will go a bit deeper into loans, and also we will learn more about banks from the curiosity of Rakesh that would help us uncover some truths about how a bank does business with the customer's money. Rakesh asked Miss Gloria how much of the customer's money is given to those who need loans. Miss Gloria appreciated Rakesh for asking this question. There is a pretty complicated answer to this, but I'll try to simplify as much as possible. Assume that you are the only customer of the bank and you continue depositing your monthly salary in this bank. Let's say after 1 year, you deposited a total of 3 lakh rupees. Now, according to the fractional reserve system that we need to follow, we need to keep 4% of your 3 lakhs, that is 12,000 rupees with us, and the rest 96%, that is 2,88,000 rupees, will be available for some other customer to avail it as a loan. This 4% is called the cash reserve ratio, and it varies with different banks. But such a situation is not very practical. There would be thousands of customers depositing their money and thousands of others who will come in need of a loan in real life. So in our locker, or what we call our bank vault, we have a lump sum of money which is the collection of all the customers' money in totality. So the 4% of that lump sum is kept in the bank and the rest 96% is being used as a loan. Suppose you had deposited a total of 1000 rupees in the bank and another person named Swami comes to the bank in need of a loan. According to the fractional reserve system, we have kept 4% of 1000 with us and the rest 96%, that is 960 rupees, is made available as a loan. And let's assume for simplicity that Swami is actually in need of 960 rupees. So we take that amount and transfer it into Swami's account. Now, we assume that Swami actually has 960 rupees in the account and we apply the fractional reserve system to that also. That means the amount of 960 rupees which was technically made as a loan, from that we take out 4% of it and keep it with us, and the rest 96%, that is 921.6 rupees, is being made available as a loan for someone else, and this chain goes on and on. Rakesh got very confused. He asked, if you are giving the money to a person from someone else's loan, how is that even possible? Won't the person, or in this case Swami, who needed that loan, feel short of money? Miss Gloria said that the money in the bank account is just mere numbers, which we call virtual money. Because if you think for a moment that when you deposited those 1000 rupees and at the same time Swami took a loan of 960 rupees, we added those 960 rupees to Swami's account, but at the same time you could also see 1000 rupees in your bank account too, and not the reduced amount, that is 1000 minus 960, that is 40 rupees. It is true that those 960 rupees came from you, but actually they are just mere numbers. You already had 1000 rupees in your account and Swami now has 960 rupees in his account too. In actuality, we didn't reduce your money from your account at all, but added virtual money to Swami's account. So how did you create that extra virtual money? Miss Gloria said, we didn't create it. That's why it's called virtual. And we know from the fact that Swami will pay interest on that loan too while returning the loan. So, from that extra money, we provide you your interest on your deposit, and the rest of it is our earning. This is how the bank does business. So, if I summarize, I'll say that we never reduced money from your account at all. However, it is a portion from your money only, but also since Swami pays back the loan with some extra money, that is, with some interest too, it feels as if the money is not taken from you at all. Understand it this way, it is like adding and subtracting 5 rupees from 10 rupees. We gave the money to Swami, he returned it with some extra charges. Hence, we deposit the virtual money, which is just numbers and not cash, into Swami's account. And the information of these virtual numbers is added to Swami's debit cards so that he can do the money transactions. And finally, when he pays back the loan, we will get the real money from which I give to you as your interest, and the rest is our earning. So keep in mind that virtual money is given, but we acquire actual money. This is how the customer's money is being used for loans.
So hope you guys had fun. Please like, share and subscribe to this channel for more interesting audiobooks.